Welcome to Insights. I'm Eric. Thanks for stopping by here today. We're going to talk about Bitcoin. We had spoke about the grain market earlier today, and now we're going to follow that up with a Bitcoin review. Bitcoin has been a market that just won't go away. If we look through the evolution of the trade, and everyone who's not familiar with that and who subscribes, and if you're watching this video, you're a subscriber. I would learn all the four phases within the evolution of the trade, and I would master the discipline that I'm talking about here because it will help you immensely. The evolution of the trade is uh, a, a trend following technique. It's a little bit more complicated than, say, following one trend. It follows multiple trends. It calls multiple trends the composite trend, which is made up of the daily, weekly, and monthly. So I think we all know that by now. The primary trend for Bitcoin has been up for 14 months. A lot of people have turned bearish on it recently. I don't know why. The primary trend is still up. It's BU for bull and time. As long as there's a number here and not a number here, the primary trend is up, and it's starting to stabilize here and gain some strength because the daily trend has been up. It's now up for 10 days. That has created a double up composite trend 10 days ago. It's not quite as powerful as a triple up, which would include the weekly, but that still may yet to come here. So let's take a look at how it's moving along. We can see the double up is still in place. The composite X bar score is still relatively low at point or minus 5.4, so everything looks pretty good. We have high compression. High compression is usually a precursor of expansion, and that between compression and expansion usually comes acceleration. In this case, it generally follows the primary trend and the composite trends, and the composite trend is now up. It's double up rather than triple up, but it is still up nonetheless, and I think the bears have it all wrong. This is not an endorsement, a blind endorsement for crypto. I think people are going to be disappointed what they're going to do with crypto in terms of the grand solution to all the problems. But then again, I think the people who are pulling that off might be upset with or not like what the public response is going to be to their solution. So, but that's another conversation. This conversation is about following the evolution of the trade. The daily trend is continues to be up, and it's pulling everything up. And this used to be down in the 130 range, so I think this has produced a 50% return since the low water mark. I've made some comments on social media and the internet saying, be careful, bears, be careful. I will continue to say the same thing. So let's take a look specifically why, and we're going to reinforce that with energy. If you want, click this link here and you will pull up your energy chart from the cloud, and it's going to look something like this as we get there. But before we get there, we're going to take a look at the daily chart. I think this gap right here was an important part that's generated another reversal, and we'll see that in a second. It represents a sea change, and now we're starting to climb above the resistance levels here. But I don't, rather than draw my own resistance and support levels and all those things that everyone tends to do and find their own eyeballs and their own opinions to do that, I let the computer draw them, and we're going to zoom in on this. This is for GBT going back for as long as it's been trading. Plus, I back and filled it with some of the Bitcoin spot prices. The reversal that was marked up there, up in this chart, the computer has picked up on. So I think this is an important. It's an important zone now. It marks this zone of an importance. It suggests that this is important support. We are trapped between the two layers. Since we have turned, we're probably in an air pocket that's going to test this zone and these zones up here. And then once we get up into here, it's going to slow down. When we reach that point, and hang on a second. When we reach that point and we get to the upper bands here, the overhead reversal zones, I think we're going to have the computer, or the trend, not the computer. I think the computer's telling us that the price is going to have a problem. I think we're going to have to see what energy looks like when we get there, we see that by studying DI. I think everyone who's watched this knows that the DI columns are here, and we can see DI is 5, 65, and 59. This is 59 for DI2 is a really high number. It's one of the highest numbers in the matrix. It's one of the largest bullish energy bills that's out there. And you can see we're pinned way above the critical threshold, the bullish threshold here. The computer recognizes it as a bullish EB, which is energy build. Even though DI2 fell slightly from last week, it's still at 65. It's above 60. I think last week it was in the 70s. But remember, we're starting to rally here, and it's not even coming down a lot, which tells me that there's still a lot of energy inside the trend. And even as we start to pick up steam, WA, which is a form of participation within the contract, it's still 5, which is extremely low. That tells me that there's no one there. They still have yet to jump on. I would be really careful if I was giving out a bearish story on Bitcoin. And for a number of reasons. The most obvious is the primary trend is still up. It's producing a profit. We see it here, and it's still young. The primary trend price cycles here, the primary trend time cycles there. They're both below zero. So this move is nothing. There's, in terms of what this asset has done before, as long as the trend is up, I mean, there's nothing to even be discouraged by in terms of the price and time cycles. There really is no extension anywhere inside the 3 time frames. So you can't say it's time to take profits. And yet, as this thing organizes, double up, it's been that way for 10 days ago, or for 10 days, there's no bullish discussions about Bitcoin hardly at all. I mean, you barely hear anyone talk about it. Bitcoin in this state at the composite trends cycle mean, which is this X bar, it's one of the lowest inside the matrix. It's also showing high compression. This is an explosive setup. I'm telling you, this is an explosive setup. If I could see me, I'd be standing on my head. I'd be doing jumping jacks. I mean, really, learn to see this, people. This is an explosive setup. I mean, I've said it 3 times, so that should probably be enough. We have the energy build. We have the vital statistics within the composite trend are still so young. Everything's early. If the herd, and I'm talking about the majority, and I'm not saying that the majority is a bunch of idiots. In general, they do the wrong thing at the wrong time. But once the majority, it's the herd, it's the collective conscience, decides it's time to plow into Bitcoin, all the cycles are so young, there's nothing going to stop it. The only thing that's there to stop it are some measly reversal levels up in this area, the red ones, and some lower ones to support it. If there's the energy build, which is one of the largest in the matrix, powers through these 2 red zones, these red accumulation lines, Bitcoin's going to jump the creek on a broader perspective. It's going to take out this high. And then everyone's going to say, oh, that's super bullish. Look, it's bullish already. It's bullish. It's just the public, the majority doesn't recognize it, but we do. I mean, this is the evolution of the trade talk, and this is the discipline. This has nothing to do with my opinion on Bitcoin. It's just bullish as is. And so if it feeds on itself, if you want to go to the internet and when it breaks out of the highs and say, oh, hey, it's so bullish now. I mean, just act surprised, join the crowd so that you can stand in the middle of the room with them and they can all accept you as their equals. But the fact is you should know this already, and we do. So we're talking about it, being very direct. I prefer you would have bought the reset, or the computer prefers you follow the trading discipline. This is not monkey pile on any time you feel like it. I mean, we are 10 days after the reversal. After the reversals come, or the reset comes, technically we're supposed to watch and do nothing and wait. And the only next move is when do we take money off the table on the reversal? We don't see that yet because there's no cycle extension, but when the time comes, we'll talk about it. But, do you go Monday morning and chase into this because you didn't buy the reset? Well, I'm not going to advocate ever doing that. If you want to do things without my knowledge, it's fine. I mean, it's a free country, a free decision-making process, but the evolution of the trade is very strict. We bought the flip 14 months ago. We've taken some profits here and there, and we've buying resets. This is a reset that should have been purchased, or I would say should have been. I mean, all resets are there. Was it viable? Yeah, there was an energy build. It was almost as big as this. So does Bitcoin need to back and fill? Well, probably Probably does, probably doesn't. The fact is it reset. And I've said even several days ago that the reset's looking more viable as each day passes. So those who did it, pat yourself on the back. If you are going to chase into Bitcoin later, you're not doing following the evolution of the trade. You're just doing that off of your own. But you can use the metrics here to know when the composite trend or the daily trend starts to get extended. I wouldn't chase if this thing goes to mid-cycle. I wouldn't chase if these start to get extended. And I wouldn't do anything other than the evolution of the trade tells you because mistakes happen. But I'm sure people will do all sorts of things. It's just that if you're bearish or you're listening to people who are bearish and who don't see the energy builds, be careful. They don't see these numbers. They don't see this in particular. They do not see these. They do not see the low participation. This is an explosive setup, and that's all I wanted to convey. If you have any questions about what we talked about, contact me. You know, write down a piece of paper what was said, or where, and so you remember these kind of setups. They will show up in other markets. That's the beauty of the evolution of the trade. It's completely repeatable. They follow different cycles in other markets, but they follow the same type of logic and discipline, and that's what makes people more consistent. It's the routine and the consistency of format and discipline. You don't hit a golf ball 250 yards by taking a wild hack and looking like a baseball player in doing so. You have the mental discipline to set yourself up correctly, and you use the mechanics within the golf swing to repeat it. Those that figure it out take the emotion out of the game, and they have more fun. Those that don't throw their clubs into the water every other time they play, or curse every other shot, which I've seen a lot of people doing that. But it reminds me of trading. If you ever want to get to the next level, you have to understand things like this and incorporate the discipline. So make sure you guys do that, and make sure that Bitcoin it's not getting any more bullish than it was. It's still bullish as always. It's just that as it continues to move higher, it's still not discouraging. It's like, hey, buddy, that's what the invisible hand's saying to us. Hey, look, this is probably not over yet, and I don't think it's over quite yet either. If you have any questions, let me know. Contact me back at the blog. Take some time out, go play some golf, do something before it really gets cold here in North America, or you can't go out and do anything. So enjoy the day, but keep an eye on Bitcoin because I think it's going to be one of the better plays probably coming up in the fall. Thanks for watching. We'll talk to you guys later.